All right, again, my name is Dave. I'm with the Compass Options Text Alert Service and Live Trading Room. I've been doing this for about 13 years, full time, and it's what I love to do. And I also love to teach and teach the methodologies that I've found work the best for me and the strategies that work the best for me. All right, so let's move ahead here. The first thing I have to do, of course, is get the disclaimer out of the way. I don't want the SEC calling me. All signals and trading opportunities provided here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay. By the way, if you have any questions during the presentation that I can't answer, you go ahead and put your username and phone number in the chat box or in the question box or your Skype username, and Rory will give you a call back. Somebody from Right Line, specific, probably Rory, will call you back just to answer the questions. We don't really do any soliciting by phone, but he would call to answer any questions. You just call you one time. All right, anytime you want to do that. Again, this is just a graphic on the SPY Super System. Basically, what we do is we track institutional money flow. That's how we find whether we want to take a trade or not. All right, so, and again, here's a graphic of David Wise, that's me, the Compass SMS Text Alert Service. This is how we send out alerts for folks who join the alert service. All of our high probability trades that we send out on the alert service will come out through SMS alert right to your phone. I'll go over the exact criteria for those and also what the setup is when you get them, what's going to be included in that particular alert. All right, so first thing I want to cover here, well, first thing I'll tell you, I get a lot of questions about, I usually don't talk about my career, how I get to where I am very much. You know, I think people are much more interested in the strategies behind it, how the strategies work, why they work. But I will tell you that I was when I switched over to trading full time, it wasn't really particularly a conscious decision. This is about almost 14 years ago. But I was working in IT, working for a computer company that, and I knew the owner very well. But as it turned out, he had some slowdown in the business. This was in December, about 2 weeks before Christmas, and he had to lay me off in December. So he did. So I took that. I had been trading part-time for quite a while, and I said, you know, I thought this is probably a good opportunity to stay home and trade. And it was 2 weeks before Christmas. End of December, if you know, is not a great time for trading, a lot of holidays and stuff. But I was trading, I was trading, day trading and doing some swing trading and doing some credit spreads and things like that. And I was doing that through January. January went very, very well. Moved into February. February went very well. And as it turned out, my ex-boss, the owner of the company, called me back. It was mid-February, so probably about 8 weeks after he laid me off, and said that his business had picked back up again. And he said, you know, we'd like you to come on back on Mondays to get started with your job. And I told him I appreciated the opportunity, but I really couldn't afford to do it anymore. I couldn't afford to work for him, and I was going to do this on my own. Trading, and that's how I get started. A lot of people, you know, they make a conscious decision to get into trading live. They prepare for it and get ready months ahead of time. I was kind of tossed into it, but as it turned out, it worked out pretty well. So anyway, that's the story of how I get to where I am, and I've been doing this now for, say, close to 14 years. So let's talk about the stock market and what drives the market. And this is something that is important to understand. I think a lot of traders do, but a lot of traders don't. The market consists, obviously, of lots of these little marbles here. These are retail traders such as myself, and I assume probably most of you. We're retail traders, and retail traders don't have any ability to move the market. A lot of retail traders think they can move the market, or a bunch of retail traders think they can move the market. They can't move the market. When we're trading by ourselves, retail traders, what you get is a lot of chop and chaos in the market. You don't get any good smooth trends. You don't really get anything that's tradable long-term for any kind of consistent profits. when the institutions jump in, and this is the institutions, a big marvel here. Now, when I say institutions, I'm talking about investment banks like Goldman Sachs and JP Morgan and HSBC. Institutions also include things like T. Rowe Price and Vanguard mutual funds. These companies have billions of dollars that they invest, and they're trading all the time. It also includes pension funds, huge pension funds, and other huge money people that have huge amounts of money to invest in the market, buying and selling. And then you have hedge funds, and there's thousands of hedge funds. And the hedge funds also have a massive amount of money. So when I'm talking about institutional trading, that's what I'm talking about. All of these institutions that have massive amounts of money, these are the people or the institutions that can move the market. A lot of it's computerized. You've heard of algos. There's a lot of algo trading that goes on, but about 85% of all trades that go through are institutional or algo related. So what's our job as a retail trader to make consistent money? Well, our job is not to be trading when the retail traders are trading by themselves. Our job is to trade when the institutions are in there trading. If we can find when the institutions are in a trade, either buying or selling, and follow them, then we're just going to basically ride their coattails. We're going to pick up the crumbs that they're leaving behind, and those crumbs can be a lot. And when they're in there, we want to be in, and when they're out, we don't want to be in. So that's one of the main criteria that I use for my high probability trades is to only take trades when institutions are trading and in the trade, and don't take any trades when they're not. So we end up avoiding a lot of trades that might look good on paper. Technically, they might look good, but the institutions aren't in them. I don't take them. So that's the key component of how you find a high probability trade. That's one of the components. Just threw a couple of slides up here on the SPY. This is coming off of my TC2000 chart. I use Thinkorswim for my compass system, and I use TC2000 for my charting and deep dive technical analysis work. This is the SPY. These are daily candles on the SPY. This is right up through yesterday. You see we broke out to a new all-time high right here. We've been in a very nice uptrend. I drew these lines here. This is the channel that the SPY is in right now. And each time it comes back to the bottom of the channel, it starts to move back up again. So we're in a nice little move here. Now this is a standard candles, right? The next slide is exactly the same time frame, the daily chart on the S&P 500 here, but these are Heikin-Ashi candles. And the Heikin-Ashi candles, just to give you a little introduction here, shows you Heikin-Ashi candles for a bullish trade. Heikin-Ashi candles have flat bottoms. So you'll see when a trend occurs, this candlesticks have flat bottoms all the way along. A bearish trend would have flat tops. If you look back here, you're going to see wicks and tails, and here you see flat bottoms all the way up here through this trend. All right, so this is one of the things we're going to talk about as how Heikin-Ashi candles can improve your trading. So anyway, that's the SPY. That's my TC2000. If you're curious about the colors, I changed the colors of my candlesticks from green to blue if it's a bullish candle and the Bollinger Bands are expanding. In other words, we're coming out of compression, and I change them to pink if the Bollinger Band is expanding and the stock is moving down. So that just gives me I don't have to have the Bollinger Bands on here. I can see if they're expanding or they're not expanding by the color of my candles. All right, so these are the rules to trade by, 2 basic rules that we follow in the room and on the alert service. First, we trade the best, we skip the rest, and I'm going to get into details of how we find the very best trades. But this is really important. We're not looking to trade lots and lots of trades. We're looking to find only the very best trade, and so skipping the rest is really important, because this keeps us out of a lot of trades that are marginal. The second thing to know, and I tell us folks in the room all the time, our objective is not to make trades. Our objective is to make money, and this catches a lot of people by surprise because they think they're traders. My objective is just to make trades. No, your objective is not to make trades. Your objective is to make money, and you do that by making proper trades. That's the key thing here. So our objective is actually to make proper trades to make money. All right, and to become a profitable trader, we're trading as retail traders. We're trading against all other retail traders. That's who we're going to take our money from. We're not going to take any money from the institutions. If you think you're going to beat the institutions, you're in serious trouble. We not. We have to take money from other retail traders. So what do we need to have an edge? Well, these are our edges. We use the compass system, which I'll go over and explain to you. This is a system that lets us know when an institution is in a trade or when they're not in a trade. And I'll show you how they do that and how it's displayed on the Thinkorswim platform. We also trade, this is very important again, we trade relative strength and relative weakness. We trade stocks that are relatively strong to the SPY or relatively weak to the SPY. We want to be in a trade that is outperforming the SPY. So if the SPY decides to turn around and the market heads down, the stock that we're in is not going to fall as fast because it has relative strength. We always want to trade with a market trend if there is a market trend. If you've got a choppy market, then you really can't trade with a trend. You have to just focus on the stock. But if you initially have a trend in the market, that's the direction you want to trade in because it's going to give you an additional edge. And the other thing we use is what's called buy at support and sell at resistance, or buy near support and sell near resistance. In other words, we wait for stock prices to come down to a level that is a support or a resistance level that we have identified and wait for it to get there and then reverse back into the original trend direction. And when that's confirmed, get back in again. So we're getting in at one of the best prices we can. We're not getting in too far away from where the stock is. In other words, we don't chase stocks that have a lot of MOMO moving up with multiple green or multiple red candles. We wait for them to get to a price level that is on a level that we feel like is a support or resistance level. All right, so those are our edges over other retail traders. The fact that we know when the institutions are in the trade gives a massive edge over other retail traders that don't know this. Because again, our job is to beat them. And you have to think of this as when you're trading against other retail traders. It's a zero-sum game. So listen, it's basically a war that you're going into with other traders, with other retail traders. And if you've got the best weapons, and you're in there with fighter jets and bazookas, and they're coming at you with pea shooters and slingshots, you're going to kill them. And that's the big difference here. Our job is just to take the money from them when they don't have as much information as we do. All right, and this is kind of a graphic of the compass system. This is the Thinkorswim platform. I have it on. It runs on Thinkorswim and Ninja platform. But the compass system identifies the highest probability trade setup. Again, while sidestepping setups that look good, but are going to fail more often than they succeed. Again, getting into the trades when the institutions are in there. And again, it identifies when the institutions are driving in the move and when they're not. And that's how we use this. Yeah, the compass system analyzes complex trading data and displays the results in an easily identifiable visual format. And again, this visual format makes it possible for even new traders to find high probability trade setups. One of the nice things I like about the compass system is when new people come in that don't really have a lot of technical background, technical analysis background, they can help them to identify pretty quickly whether the trade is at least a potential good or a potential bad trade. And again, we're trying to get the edge over retail traders. I keep emphasizing this. This is what we want. The individual what are the individual traders' edges? Again, only taking trades that are being driven by institutions. I say this multiple times here because I want this to sink in. We only want to be in trades that institutions are in. We want to trade stocks with relative strength or weakness versus the SPY, or in the case of tech stocks, the Qs. And we want to trade in the direction of the overall market. That gives us the wind at our back. So how does it give us an edge? Well, our trades are going to be supported by institutional buying and selling, obviously. The stocks are going to be outperforming the SPY, and stocks are going to be moving in the direction of the overall market. These three things immediately give you a higher probability of being successful on any trade that you take. All right, and this is basically a funnel. I actually have a video on this, but it's a basic high probability trade setup funnel. And what you do is, as you look at a stock to see if it has the potential to be a high probability trade, you run it through this funnel, and the ones that come out the bottom are tradable. You want the daily and the 5-minute chart to align. This is really important. It's important that the 5-minute chart and the daily chart, if you're going long, they're both bullish. You don't want to be taking stocks long off of a 5-minute bullish setup that has a bearish daily setup. It takes away all your flexibility being able to stay in the trade overnight or even through the rest of the day. If it goes against you, you immediately have to get out. You can't give it any time to work. So that's really important. So, okay, so you look at a chart and the daily and 5-minute chart line. Trade with the trend, both stock and market. So if you're getting into a long, the stock should have a bullish trend for the day, and the market should have a bullish trend for the day. And if the market's choppy, then you can just use the stock trend. Again, the compass indicators need to align. They need to tell you that the stock is bullish with the institutions. Institutions are buying it for longs or they're selling it for shorts, and I'll show you how we see that on the compass platform. And it should have relative strength and or relative weakness to the SPY. We do that just by comparing the SPY movement on 5-minute candles to the stock movement on 5-minute candles. And you want to enter near support or resistance. And this is when you drop a stock through here, if it doesn't meet all of these, then it's not going to be the highest probability trade setup that you can find. And a lot of times they'll get knocked out right away on this particular one. Okay, so again, the funnel method for highest probability trade setups, this is really important stuff because this is how we find trades that we become potential for us to trade, to send out in the alert service. We want to identify the market trend for the day if there is one and trade in that direction. And this is, you have to wait for half an hour, 45 minutes to get an idea of that. And it can shift during the day, but you have to have some idea to identify it. If it's just chopped, then you don't have a trend. The stock being traded should have daily and 5-minute charts aligned. This is critical. I mean, this is really critical. So your first thing you should look at when you're trying to get into a trade is look at the 5-minute chart, see if it meets your criteria. If you want to go long, make sure the daily chart is bullish. Then switch to the 5-minute chart and look for a good entry there. The compass indicators must align in the direction of the trade. We've talked about that already. Must have relative strength or relative weakness. On a 5-minute chart, the stock price should be above the VWAP for longs and below the VWAP for short. The VWAP is a volume weighted average price. It's on you can put it on all your platforms, and it's something that the institutions use a lot to identify when they're going to get in and when they're going to get out. So you just don't want to be going long until the stock gets above the VWAP. Now, if you want to go long a stock and it's falling down and it hits the VWAP and bounces off the VWAP and confirms that it's going back into the trend again, that's a perfect support level to be able to get into the trade. And again, enter near the confirmed support and for a long and resistance for short. And you also want to look at your daily chart and make sure that there is no nearby support or resistance on the daily chart that's going to limit your profit targets. You want to make sure you've got room for that trade to work to the upside for a long or to the downside for a short to give you a big enough percentage gain to justify taking the trade. You don't want to be going into a trade long if the stock is 25 cents away from the 200-day moving average on the daily chart. You don't have enough room in there. And the key thing, and I go over this every day in the room, is have patience. This is probably the most difficult thing for traders to attain. They get very antsy. They want to have a trade on all the time. They have a hard time having patience, and a lot of times you have to be patient for hours before you can find a trade. Now, in the trading room and on the alert service, these are basically the strategies I use. I obviously do a lot of straight calls and straight puts. I think most everybody's familiar with those. I use debit spreads using weekly options expiration, and I have videos on all of these. The debit spread using weekly options expiration is a very nice strategy. I found it over time. It has a much better ROI than going out further in time. I use what's called time spreads over earnings. These are calendar spreads. Earnings we can't predict, and we don't know which way the stock's going to go. So the only strategy I use over earnings is time spreads, and what those do is they capture the volatility crush when the earnings come out. When the earnings before the earnings come out, the market makers have the premiums on the puts and calls jacked up high because they don't know how much the stock's going to move or in what direction it's going to move. So this strategy here allows us to capture the volatility crush when the after earnings come out. And we just did one of these on Royal Caribbean this past week, and we made 50% overnight. Get in like at 3 o'clock, get out the next morning about 9:40, and made 50% gain on it. And I do these over earnings, but they have specific criteria they have to meet before I take them. I also have a strategy called the weekly ATM strategy. weekly at the money or a weekly cash machine strategy. And this basically is a premium capturing strategy where we sell puts week after week after week while maintaining or holding on to a much longer dated put that protects that positioning, basically creates a spread out of it. And we also do a lot of credit spreads to capture premium over a few week period. And we also have what's called the SPY super system. This is for very high probability trades set up to capture SPY moves and Q moves. We obviously need a trending market. We need the institutions to be in the SPYs or the Qs, and we need it to be coming off a support or resistance level at a proper level for us to take them. So we do take some of those in the room. I don't alert on these because they're much too quick. You can't really alert. I can't really alert on stocks that are going to last for 3 or 4 or 5 minute candles. All right, now let's talk about the alert service. Again, I want to cover the services that we have in some of our results, and then I'm going to get into Heikin-Ashi candles. The Compass Alert Service is designed for day trades and short-term swing trades. I mean, this is not an investment service. It's basically for day trades and short-term swing trades. Short-term being overnight to maybe 3 weeks out. It's obviously designed for traders who can't watch the market all day. The real-time alerts that come out are going to be on the highest probability trade setups, as I've already said. That's all I trade, high probability trade setups. And how do I find them? Well, institutional involvement, first thing. Market internals, the second thing. And by doing technical analysis. And those things are going to let me identify the highest probability trade setups. And that includes relative strength, relative weakness, bouncing off support or resistance, etc. But that's what the alert service is for. Now this is just a P&L that flew through. I didn't even put this in there. This is just a P&L over from August, 90 days of the room. It's obviously that's the kind of P&L you want, moving up in the right direction. Just kind of recap. I'm going to cover some results. This is something I just did here. This was from March to June of last year. Just to kind of to show a recap of a win rate, which is typically between about 85 and 90%. Sometimes it'll get a little over 90. Sometimes it'll drop down to 80. But it typically runs about 85, 86, 87%. So these are specific. This is exactly what we did from March, April, May, and June. Again, you can see we had 43 trades. A lot of times we'll have fewer than that. Again, we had a nice win rate in each one, and the profits, they bounce around. You can't make the same amount of money based on the same win rate because you don't know what the market's doing. You don't know how long you can stay in a trade, and you also don't know if there's any news events that come out that maybe kill one of your trades. To hurt profits, but the profits you can see are pretty consistent here. All right, so I'm going to go over the September through January details that we've got, and the main reason I show this is sure I want to show how good the service is, how good the room is, but I also want you to be aware of what kind of percentage gain that you can normally expect on a trade. You get a lot of listen. I get the same emails you get. You get a lot of these services that are going to tell you they can make 500%, 1,000%, 2,000%. It's nonsense. If you make 1,000% on a trade and you try to do that over and over again consistently, it's not going to happen. So these are our September trades. You can see that they're going to run sometimes as low as 5, but typically they're going to run 20, 30, maybe 40%. We did have one here for 100%. We've had a couple up around 100, but that's kind of an outlier. Most of the time, you can expect about 25 to 30, 35% on the gains that you're going to make on these. And the ticker doesn't really make any difference here. You can see we had this at UPS and Amazon, but I trade tickers all over the place. It just depends on which ones are aligned for us. So you're going to see, I'm not just trading 5 or 6 symbols. I'm looking across several hundred. And again, you notice we do have some losses. I want everybody to be aware that not every trade is going to be a winner. We lost on Amazon here. We had some news that hurt us and Affirm. But most of the time, we had 25 wins and 2 losses in September, a 92% win rate, which is pretty nice, And again, if you invested 2,000 in each trade, it created a profit of 77.88. I use this 2,000 just as a baseline, just to have something to use to show what kind of results we're getting. When I trade, and I think when most people trade, depending upon what kind of day the market's having, I can put more money into a trending day than I can do a choppy day. So I'm not putting the same amount into a trade, but to judge what kind of results we're getting for purposes of basically just identifying the service, this is what I'm using. I always use 2,000 invested in each trade. So, you know, if you were taking an option that was $1, you'd take 20. If it was $2, you'd take 10. You'd be putting the same amount of money in each trade. So again, we had 25 wins, 2 losses. And this was actually, I thought this was pretty outstanding month because it was really, September was really a hard month to trade. It was an awful lot of chop. October, moving along here, again, and the key here is just see the percentages. You can see what the percentage gains are. We had some losses here, but generally speaking, it's 25, 30%, 20%, 40%. I mean, that's how the profits we make on these trades are. And October we had 24 wins and 4 losses, 86% win rate, 44.80. November trades, again, similar things again here, 84% win rate, 21 wins, 4 losses. You can see we had some losses. We had a small one in Roblox, but it's the percentages. You see how they stay similarly the same. If I'm in a day trade, for example, and the day trade is 20, 30%, 35% during the day, I'm likely going to take it off, or at least take part of it off, and then I can re-enter it the next day. Gene, you asked me on the 100% of Amazon and 86%, the losses that you talked about here. Yeah, here. The question, did I wait too long to bail? Listen, my entries and exits on my trades are all based on technical analysis. So if the stock is still bullish, even though it may pull back, then I stay in the trade, because my experience has been, as long as the daily chart stays bullish, then I stay in the trade. Then more than often than not, that the stock is going to turn into a winner. If I had bailed on some of these other positions, it hadn't given them time, I'd have a lot more losers in here. So you're going to have some losers. And yeah, I mean, if you get a news event or something like we had with Gilead, we had a news event, the FDA come out and gave a bad review on one of their drugs. Yeah, that's you can't do anything about that. But it isn't a matter of fact of how long I stayed in, how long whether I get in when I get out when I should have. I've had most of the trades we make, a lot of times they'll be underwater, but if they're still bullish, they'll turn around. And I get this question a lot in the room, you know, shouldn't we be getting out now because it's having a bad day? I'll look at the daily chart and I'll show that in the room and explain why I'm staying in the trade and why I'm not. But that's a good question, Gene. Robert, I have talked about Heikin-Ashi. No, I have not. I'm just getting ready to go into that as soon as I recover the results here. All right, so there's November. There's the December. We had not very many trades in December. 16 trades, 14 and 2. Still were able to squeeze out about 3,000. But I did, you know, a lot of holidays and stuff in there. A lot of not good setups to take. January, we had an outstanding month in January. We just finished up January. Again, we actually didn't have any losses in January. I got one that was in January that they'll get closed out in February. There's going to be a loss, but this was our results was 20 and 0, and 2,000 invested in each trade, netted $10,430 basically. So this, you can see, this is a good, and this is, you know, you're not going to get 100% wins every month. It's pretty rare. I think this is one of the few times that I've actually done 100%. Yeah, I've had a lot of wins in a row, but I usually have some losers in there, obviously. But again, like this is Royal Caribbean right here. This is one I mentioned. This was a time spread, and we had a time spread on Western Digital this month on earnings. Again, that was a 39% gain in that. So it's a pretty good run through. This was Boeing. This was an overnight trade that we got a little lucky on, in 96%. All right, so those are our monthly trades. This is just a list of some of the trades that we sent out on alerts. Just you kind of can see that there are some of them are day trades, some of them are overnight trades, and the results we get are obviously are outstanding. I mean, this one here we get in for 690, out for 8. This was just overnight, one night, 16% profit. This was STX. This is when I showed you we had 108% gain. We were in it for 2 days, in at 370, out for 770. Now, this was a stock where the company actually lowered guidance, and we grabbed it based on the news and the technicals, and made 108% on it. But so this is, so again, you can see the percentages are right in that range again, you know, 30, 38, 43, 45. These are the trades that went out on the alert. This is some recent ones that we've done just recently. Workday in for 1170, out for 1470. This was just an overnight trade. And Meta was an overnight trade here, 24%, 26%. So you get the idea. This is what you're going to see on your alerts, and this is the kind of prices you're going to see. You know, in at 505, out at 575. Not a big deal, 14% profits, but still profits. In GE, we had to wait a long time on this one, by the way. This was one of the ones that I was asked several times in the room about, shouldn't we be out of this trade? Shouldn't we be out of this trade? And I said, it's still bullish. We've got plenty of time on the option. We're going to stay with it, and it did end up giving us a 14% gain, and we were probably down to 30 or 40% on that trade. All right, so this is just kind of a recap of the 2003 trading results that we had in the room. And again, I'm using this $2,000 per trade. If you put $2,000 to each trade, take it in the Compass Options room, it produced a profit of a little over $60,000. Pretty nice. So if you had an account size of 50,000, and this is just an arbitrary number, each trade used 4% of your account balance. And as the account grew, of course, the percentage used was lower as the account grew. And it produced 120% return on the initial 50,000, growing the account to about a little over 110,000 at the end of the year. And at the end of the year, a $2,000 trade now would be less than 2% of your final accounts balance. So that just kind of gives you a kind of a 20,000 feet view down as to what the trading results are. Obviously, nobody's using exactly 2,000 per trade. I get a lot of people that use 1,000. A lot of people use 10,000. It just depends. All right, now let me see if we get any questions here. David, you say several of my slides obscure the bottom line. I'm sorry about that. It's all full screen on mine, so hopefully it's you're seeing enough. Okay, so this is again, this is the alert service. This is what you're going to get on your alerts. Every alert is going to include the stock symbol. Obviously, I'm going to say, you know, Microsoft option strike price $220, option expiration date, you know, March 15th, and the price to pay for the option, usually a range like $1 to $1.05, or 85 cents to 90 cents, something like that. So that will come out. Now, most of the time when I send an alert out, I don't actually put a sell order in there yet. I don't put a target price in there. I do on the time spreads overnight, but most of them I don't. Occasionally I will, but most of the time you're going to get an alert with just the buy price, and then you'll get another alert later with the exit price, what to sell at, because I like to watch the price action, and if we hold it for a couple of days, I like to see the price action. And then if I see a gap up pre-market, for example, I watch the pre-market action. If the stock gaps up pre-market, then I'll go ahead and put an order in to sell at to try to capture most of that. Or if I already have a sell order in, I'll go ahead and put an alert out to raise it to take advantage of the gap. Okay, so the question we get is, after going through the results, how do we achieve these kind of results? And obviously we do this by identifying when institutions are driving a trade and when the market internals are heavily bullish in our favor. And so we only take trades when both of these are in our favor, allowing us to align the trades with the institutions in the market. This is a key thing. You've got to have the information, but that's what we do. Jerry, is there a problem with liquidity and all of our members piling into trades? That has been a problem with many option service I've seen. No, I haven't. Not normally, Jerry. A lot of times, if I have an issue with liquidity, either I won't take it. B, if there's a liquidity option problem, you can always take stock. And a lot of times, if there's a wide bid-ask spread, but I still like the stock and I think we can profit from it, I'll put a debit spread on, and that can get, if I can get in at a certain price, and I have a very specific strategy on how I take debit spreads. You know, what you have to pay, what you can pay for it. You can't pay any more than a certain percentage of the spread. Then that works pretty good. But I haven't really had any problems with liquidity problems. You'll see that most of the stocks we take are fairly big name stocks. I mean, you know, they're not necessarily all S&P 500 stocks, but we get a lot of Microsoft, Tesla, Apple, Amazon, Google, etc. Not a problem with liquidity there. All right, so let's move along here. This is just a blurb on how I get the results I get. Obviously, putting all these things together, I get a comprehensive view of the market, allowing me to precisely identify when institutions are influence into trades and gauge the overall market sentiment. So that's how we get these results. I mean, it's pretty. I've got it boiled down to something that's a pretty easy methodology to do. Okay, so I want to talk about the compass system before we get into Heikin-Ashi, because I want you to know how we find the institutions are in a trade. And this is, it's a question that people should have. What we do is we do a triple screen assessment of 3 things. And triple screen assessment, this is a fancy word. Some people call it fractals. It's looking at multiple time frames. And we look at 3 different things. We look at the across multiple time frames. We look at the momentum, we look at the trend, and we look at the money flow. All 3 of these things. Now, if the momentum, the trend, and the money flow are all moving up on, for example, the 5-minute chart, the 15-minute chart, the 45-minute chart, the fact that those are all moving up in the same direction across multiple time frames, the likelihood that institutions are driving that is extremely high, in the upper 90% that institutions are doing that. Retail traders can't do that. This is a setup here. Now I'm gonna ease into Heikin-Ashi candles. I kind of want to show you a chart. This is a compass system chart of Tesla. This is a 5-minute chart of Tesla. And I use this because it's a nice example of how we tie things together. Here's the compass system. Here are my indicators. The key ones that I use is this one right here. This is multi-time frame momentum. This is current time frame momentum. These 2 need to be aligned the same color. The green or blue for long, red or yellow for short. This is my long-term trend, and this is my money flow or my bias. These are the 2 most critical ones. This is also pretty important. So here's a 5-minute chart on Tesla. This is using Heikin-Ashi reversal. These candles are Heikin-Ashi candles. I've got them coded as Heikin-Ashi, and I can do that. And you can do that at any platform. You just switch from candlestick to Heikin-Ashi. But you notice we've got several things here. This 15 EMA is this little thin line here, this little green line. That's a support level. That's a support level. So I'm looking to get into Tesla here. You see how I go from a wick and a tail on this candle to a flat bottom and another flat bottom right here, coming off of the 15 EMA. So it's bouncing off of support. It's got a Heikin-Ashi reversal candle. Everything's bullish. The institutions are in there. And this little candle colored arrow right here is called what's called the pop out of the box signal. And this is the compass system produces these. It produces these when a stock is coming out of compression. So it's also another nice criteria to use to get into a trade. So this is a Heikin-Ashi reversal on Tesla. This is where we took it, right here off of this candle, as it broke up over the 15 with a pop out of the box signal, everything green, and we rode this thing all the way up. And notice how easy the trend is to identify with Heikin-Ashi. You see the flat candles, flat bottoms, flat bottoms, flat bottoms, flat bottoms. As long as you got flat bottoms, you can stay in the trend. And this is where we get out because we're getting wicks and tails. So we don't have another flat bottom candle, time to take profits. It could move up again from here, but you've already in a nice little up move. So that's how Heikin-Ashi shows trend. And I'm going to cover a lot of these. I'm going to show some live charts, but that's what we're looking for. And this is the compass system showing you that. All right, so Heikin-Ashi candles. Let's talk about Heikin-Ashi candles, what the advantages are over standard candlesticks. First of all, they identify confirmation of trend reversal. If we look here, this was basically a compression, and this is reversing to the upside here. The Heikin-Ashi candle shows that reversal with going from a wick and a tail to a flat bottom. So it can identify trend reversal. This is a perfect way to get into a trade when it's come down to your support level and you're waiting to see if it's going to confirm, and it's going to reverse to the upside, and if it's going to be confirmed. That's what's going to show you that. So again, it allows trade entries on confirmed reversal, avoiding failed breakouts. If you use a Heikin-Ashi candle for a daily or a 5-minute, if you use it for a breakout, in other words, the stock comes down, hits support, and then starts to bounce. If you use a Heikin-Ashi candle, you're basically getting confirmation of that reversal because of the way Heikin-Ashi candles are created. It smooths out the price movement to eliminate noise, so you can see the smooth uptrend or downtrend. You can see that nice move, and I'll show some live charts where we can pick that out. So it allows the trader to stay in the trend longer, avoiding shakeouts. If you're not getting shaken out by noise, and you're looking at Heikin-Ashi candles, you'll stay in the trade. So it allows you to continue in there and not get panicked, because a lot of people panic when they get one bad 5-minute candle. And it's, you know, it's a good way to get shaken out of what could have been a profitable trade. It also identifies when the trend is waning, when the momentum is waning to the upside or the downside, so you can at that point in time get ready to take profits. And obviously it makes it much easier to visualize the current trend without all that chop and everything. All right, so just kind of a blurb here, and I have a video on Heikin-Ashi candles that if you become a member of the room or the alert service, you'll get that. But if you have not used them in your technical analysis, you may want to try using them. I think it'll improve your trading. Basically, Heikin-Ashi candles means average bar in Japanese. So again, it smooths out the price action, identifying trends and reversals, and is clearer since they eliminate a lot of the noise, and obviously makes it easier to stay in the trend. And again, to cover this, I'm going to show a visual in this minute. Bullish Heikin-Ashi candles have flat bottoms, and bearish Heikin-Ashi candles have flat tops. Always. All right. Now, you're going to see on the flat bottom candles, you're going to see like a fish. You're going to see some wicks on the top. Now, most traders think when you see a long wick on the top of a candle, a regular candlestick, that it's bearish, that you've got sellers coming in at a high price and driving the price down. But that's not the case on Heikin-Ashi candles. Heikin-Ashi candles with wicks on the top are more bullish than ones that don't have wicks on the top. All right, so again, you can stay in a bullish trend as long as no flat top HA candles appear, indicating a lull or reversal in the trend. All right, a reversal in a bullish trend is going to have a flat bottomed Heikin-Ashi candle, having both wicks and tails, followed by a flat topped bearish Heikin-Ashi candle. That's going to be a reversal in a bearish trend. You go from a flat bottom candle to a candle that's like a doji, followed by a flat top candle. So again, the doji indicates momentum is slowing, etc. And the bullish reverse exactly the opposite. You can have a flat top red candle followed by a couple of dojis, followed by a flat bottom green candle. That's a reversal to the upside. Now, it's important to be aware of something. When a stock is in a trend, it's coming down. Let's say you've got a lot of long red Heikin-Ashi candles to the downtrend, and then you get a doji, then you get a little tiny green Heikin-Ashi candle to the upside, a flat bottom green candle. You don't want to get in on a small candle that's trying to reverse a large candle move in the other direction. You want to wait till you get a bigger green candle or a couple of green candles with flat bottoms in a row. One little green candle is not enough if the downtrend was very, very strong. Okay. And again, I get a great success with Heikin-Ashi candles. So typically, when I'm using that, I get about a 90% win rate. And again, this is what I just talked about. The Heikin-Ashi candle, when you reverse, it needs to be at least the height of the previous candles or taller. You don't want to reverse on a tiny little candle. I mean, this is true in regular candlesticks. You know, small candlesticks typically don't give you much indication of a trend. Small candlesticks can be reversed very quickly by one big candlestick. Okay. Obviously, the trade, just goes into the other criteria. The trade should be a stock with relative strength or relative weakness. The Bollinger Bands expanding, I use that by coloring my codes, my candlesticks. And again, the final criteria, which is critical, make sure that the institutional traders are in the trade and supporting the reversal. So you check your compass system and make sure that the institutions are in this trade. That will give you all the elements you need to find a high probability trade that's doing a Heikin-Ashi reversal. And I do, by the way, the last step is I actually do trade to I switch to standard candles when I'm thinking of getting out of the trade, because I can catch the reversal to the opposite direction a little bit more quickly on regular candles. And it might force me out earlier than maybe I wanted to if I would use Heikin-Ashi. But if I have a good profit right there, I don't have any problem with taking profits at that point. So this is just a quick graphic of Heikin-Ashi candles, what they look like. These are bearish. Now notice that each Heikin-Ashi candle starts in the middle of the previous Heikin-Ashi candle. See how it starts in the middle, starts in the middle, starts in the middle, starts in the middle. Heikin-Ashi candles always start in the middle because they're constructed of two candles. Heikin-Ashi candles are made up of price action on 2 candles. Now, right here we have a bearish Heikin-Ashi with a flat top. Now notice we get a couple of wicks and tails. This would be, it's actually not a reversal. It's actually a confirmation of a continuation of the downtrend. So you've got a flat top followed by wick and a tail, flat by another flat top. So this is basically a confirmation that the downtrend is still intact, and you keep it that way. Now, if as we come down here, and you notice we're getting wicks and tails here. Now we're getting green candles with wicks and tails. We've got another kind of a doji candle with wicks and tails, another wicks and tails, but the candles are getting green. Then we go to a flat bottom green candle right here. Right, this is a Heikin-Ashi bullish reversal right there. So when you get this candlestick, this would take the trade. Now, should you wait until this candle here closes? Well, I usually take it once it's created. What typically happens on these Heikin-Ashi candles, once they're created with a flat bottom like that, it's very unusual for those not to continue with a flat bottom. It would take some really crazy price action for that flat bottom to go away. So I feel pretty comfortable taking it. If you want to, you can wait until the till the candle closes. But here you can see Heikin-Ashi to the upside, flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. Nice, smooth trend. And that's what Heikin-Ashi candles do for you. All right, let me just ask a couple of questions. Jerry, you like the service? You love the service, and it's great. Yeah, you're welcome. How many trades per week and day? Calls and puts only, I think you probably mean. Typically I don't trade a lot of trades. On the alert service, you might not get any for a day or two, then you might get 2 or 3. I think we have 3 or 4 active right now. I typically don't have any more than 5 trades active at one time. If we take a trade off during the day, we'll be looking for some others. But it's not going to be a lot of trades, as you probably saw by the recap there. We only had like 16 in December, or we had 20 in January. Is the compass system available on thinkorswim? Proprietary indicators? Yeah, you have to purchase the compass system from Rightline, and the technicians there will put it on your thinkorswim platform. But thinkorswim is the platform we put it on, but you can't get it through thinkorswim. Is 15 EMA or 15 SMA? 15 is EMA. 15 is always the exponential moving average. The one that's on the screen that I showed you is actually a smooth EMA. If it's an EMA of an EMA, it doesn't move around as quickly, but it's exponential moving average. And I'll show you when I show you my TC2000, the indicators I actually use on there. How to interpret an HA candle with wicks on both sides? Well, if it's got you're talking about a wick and a tail, then it's really not a flat bottom or a flat top candle. It's more of a doji, and that isn't a reversal. What you're looking for is a flat bottom candle, for example, for the green, and then you just look for flat bottom candles. Now, when you start getting wicks and tails, then you want to start considering whether the trend is going to reverse back again. What causes a Heikin-Ashi candle, a bullish candle, to open with a tail? Typically, what causes that is the price action on the 2 candles put together. There was a fairly large move to the downside on one of the candles. Does compass work on all time frames? It does. Yep. I use it on the 5 and the 5 and the daily. But you can use it on the hourly if you want to. But I only use it on the 5 and the daily. Some of the indicators in compass are not going to come out on every single time frame, but most of them are, just because of the complexity of the calculation. You like my presentation? I appreciate that. Can I show a trade from this week that was taken? Yeah, I'm going to show one in just a minute, Mark. I'm going to show one that we just took yesterday. I'll show you that. Okay, so again, here's the Tesla trade. I'm going to get into some live charts here in a minute. I'm going to have to drop the slide presentation to do that. But here's your flat bottom. See, this is where you get what he was just asking about. What causes that wick and tail? I'll show you that. Basically, you got to move down and then a move up, but the down move is bigger than the up move, and that's starting to tell you that there's a little bit of a warning. This was a Gilead. This was a trade we took. This was a Heikin-Ashi this is a daily chart. This is where we took this right here. You see how it reversed. You get a wick and a tail, flat bottom. You also had a flat bottom here. This was also a Heikin-Ashi reversal, followed by So you don't necessarily get them all in a row, but there is no reason to exit a trade when it looks like that. And this was a GE trade that we also took. This I wanted to point out just because we took this, and this is the one that when we get into the trade, there was a lot of consternation about the trade going against us. But you can see this Heikin-Ashi reversal in it right here. Yeah, it worked pretty nicely. And I think this was when we get in back in here somewhere and had to ride this down and then took profits as it moved up right up here. Okay. All right, so we're going to look at some live charts. I'm going to drop the slides, and I'm going to go to my my TC2000 chart here. All right, and I'm going to switch this over to this is the SPY right here. Now that's the Heikin-Ashi SPY that we were just looking at a minute ago. All right, so what I'm going to do is I've got some stocks that I want to show. I'll show the American Express trade that we took at the end because I want to have the compass system up to show you that. But here's SPY. So I want to take a look at some of the. I ran a scan yesterday. Here's some stocks here. Now here's Amazon. Now you see this is a flat bottom candle right here. Now this was off of earnings, and you can if we go back to a regular time frame. This is a regular candlestick chart. All right. You see the big volume, big earnings. See the difference between Heikin-Ashi and here. It's a big gap. You notice that Heikin-Ashi does not have any gaps. You're not going to see gaps in Heikin-Ashi because it's putting two candles, it's putting together this. But that was a Heikin-Ashi reversal candle right there. If we go back and look at Amazon, you wouldn't be taking it bearishly, but here is a bearish Heikin-Ashi reversal right here. See the wick in the tail? Here's a flat top, flat top, flat top, right down to the red line, which is on my system here, is a 50-day moving average. So I just cover those. The lines you see on my chart are, this is a 100-day moving average, the blue, the 50-day is the red, and I have a pink one, purple one down here. That's the 200-day moving average. And then I have some lines drawn. I have what's called algo lines that I draw in. All right, so that's Amazon, regular Heikin-Ashi. Now let's look at another one. Look at the SPY. We looked at that already. SPY. This is a SPY Heikin-Ashi. You see the Heikin-Ashi reversal on the SPY yesterday? Off of this little pull down, you see the Heikin-Ashi reversal on the SPY right here, coming right off the bottom of this trend, right there. Heikin-Ashi. Look at how nice that worked. Again, if we go to the regular candlesticks there, it looks so much choppier. But if you go to the Heikin-Ashi, you've got a nice move up in this thing. And here's another one right here. Wick and a tail, flat bottom, flat bottom, flat bottom, flat bottom, flat bottom, flat bottom. Little bit of a tail, but still okay. Flat bottom, flat bottom. Time to think about getting out. This white line, by the way, is the 8 exponential moving average. I keep this in all my charts, 15 in the daily, other 5 in the daily. This I can judge the fairly quick moving average to tell me if the trend is maintaining or it's not. We've got a nice trend in the SPY here, still maintaining to the upside. All right, and the Qs. The Qs are going to look very similar. Here's the triple Qs. Triple Qs here is a Heikin-Ashi reversal on the triple Qs on Friday. All right, so we had a nice one here, moved up nicely, and went sideways, came down a little bit, and now it's reversing back up again. Here was a Heikin-Ashi reversal first week in January. We had that little pullback. Notice a little reversal right here, the Heikin-Ashi reversal to the bearish side, flat top. It's also pink, which means my Bollinger Bands are expanding. So flat, 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 out. You're gonna get out right there. And again, it was right on the support line that I had drawn. All right, let's take another look. Let's take a look at NVIDIA. NVIDIA. All right, another nice chart here on NVIDIA. Again, let's look at the regular candlesticks. Here's the regular candlesticks. Pretty nice trend. You can see it's been in a tremendously nice move up here since 1st of January. I can keep going back on these, and you can find them all over the place. You can see how choppy it got in here. Now we're in a pretty nice trend, and this looks like a nice move. You say, I wonder if this is going to confirm. You see how it's compressed through here and bounced off of that. Heikin-Ashi is telling you right there, boom, right off of the 8, flat bottom, Heikin-Ashi reversal. And also, one of the other things to check for on these things, when you're getting this, these are my volume candles down here. These tell me that if they're white, they're above average on a 50-day moving average. So I know I got pretty heavy volume right there. I got pretty heavy volume right there. So that also gives me confirmation of the reversal in the trend. I got snow, SNOW, an interesting stock right here on snow. It's been compressing a long time here, and it broke out. Now, if I look at my regular candlestick, this is an algo line I have drawn right here. One of the things I do is I draw algo lines. This is what a lot of the algos in the institutions use for a support and resistance level. Notice that it came down, touched there, and broke above it yesterday on high volume. It's a breakout. It's a beautiful breakout. And if I switch over to Heikin-Ashi, there it is, Heikin-Ashi flat bottom candle right there, and a big one, overtaking these other two candles. High volume overtook these other two candles. That's a nice Heikin-Ashi reversal on snow. FTNT is one of the trades we're in here. It's been kind of chopping around for a while, but it's been following the trend. We're in this one. We're up just a little bit on it right now. If you look, it's been kind of choppy right in here. But yesterday, even though you look at this candle setup, it doesn't look like much. If you go to Heikin-Ashi, you can see I do have a flat bottom candle here. I wish it was blue, but it's not. But this was a Heikin-Ashi reversal right here, and it followed up nicely. Right, so that's an FTNT, which again, the trade we're in. This is whoops, IKBR. Wrong one. How about IBKR? Dyslexic. This is Interactive Brokers. Heikin-Ashi reversal candle right here. My TC2000 tells me when the next earnings is 416, so I don't have to worry about that. But that's a pretty nice candle right there on Interactive. And here it is right here, again, on big volume yesterday. And again, been pretty much compressing through here, broke out really nicely. So those are ones I'd be looking at and say, maybe I'm interested in taking some of these on an overnight trade. Now, let's take a look at the short side. We look at all bullish. Let's take a look at the short side. Here's NEO. This is a pretty cheap stock, but this is NEO here. See this Heikin-Ashi reversal right here, right off of this 200-day moving average? I'm sorry, that's not the 200. 200 is further up, I think. Yeah. So anyway, this was the Heikin-Ashi reversal right here off of there. And again, it broke down. I especially like it once it breaks below this 8, this white line, the 8 exponential. So I would take it short anywhere in here. And notice how it's just stacking, flat top candles, flat top candles, flat top candles, all the way down. It never broke from a flat top candle this whole way down, which is from about $8.52 down here to what, $6.50, $7.50. That's 25% drop in the stock price. And we just put in another one here, just below the 8, followed by another flat top. We had a little bit of a choppy one here. Now we just did a Heikin-Ashi reversal again yesterday on this NEO to the short side. And here's the daily, the regular chart on it right here. A lot of gap action in NEO. Gaps a lot. So if you want to see the gaps, you need to go to the regular candlesticks. So this Heikin-Ashi. So that's NEO is a nice short setup. All right, gold, GOLD, Barrick Gold. Been short. I mean, if we go back and look, we had a nice reversal here. Now here's a Heikin-Ashi reversal to the bullish side. Another Heikin-Ashi reversal to the bearish side. We had a big candle, then it moved sideways. You can get in and take profits here if you wanted to, but this is a beautiful entry right here for Heikin-Ashi reversal, and down it goes. And now it just compresses, and now it's showing short again with a Heikin-Ashi reversal to the downside. That's a pretty big deal. Almor is that 8, and the white line, the 8 EMA, yes it is. But this is the 8 EMA. It basically tells me the trend with one easy glance. And typically I don't want to be, if I'm in a trade short, I want the stock to stay price stay below the 8. If I'm in it long, I want it to stay above the 8 on the daily chart. All right, a couple more shorts. Let's do KMI. Kinder Morgan, another short right here. And the reason I show this is you can see the wicks and tails, wicks and tails, wicks and tails. Here we go, flat top, right down, right through the 50, right down to the 100 and the 200-day moving average. Bounced off the 100 and 200-day moving average, moved up above the 8, hit the 50, fell, and here's a flat bottom, a flat top, bearish, 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 and here we are with another flat bottom, pink, below the 100 and 200-day moving average. So we got it coming out of compression. nice short setup on KMI. Now, let's look at the regular chart. There's KMI. See how choppy it looks here? When, you know, does this candle tell you that it's not, that it's going to go down? You don't know, but the Heikin-Ashi is telling you that there's a good chance that it's going to. XPEV is another one that's been a nice short. This thing has been a beautiful short for a long time. And again, this is my algo line right here. Let's look at the regular chart on XPEV. You see how it's just been dropping, but looks so choppy. But go back and look at your Heikin-Ashi candles. Right here, you got a breakdown right there. Flat top, wick and a tail, flat top, flat top, flat top. Couple of dojis, but still red. And then another flat top, and I just followed it right down. And one thing to notice about the price, once it gets extended away from the 8, it'll typically come back to it. So one of the things I try to teach is, if you think the stock is too far extended, see how far it is away from the 8 exponential moving average on the daily chart. If it's 3 ATRs or 3 average true ranges, the stock usually moves $5 a day, and it's $15 above the 8 EMA. That's too far extended. So here's a nice trade in XPEV off of the Heikin-Ashi. So I hope you're getting a good idea of what this looks like on these Heikin-Ashi candlesticks. Just got a couple more I wanted to share. And SKX, this is Skechers. Again, let's look at a regular chart right here. Boom. It was probably earnings. Yeah, had earnings. So that's an earnings. It's an earning candle. So typically I wait to see what these do the next day before I enter them. But the Heikin-Ashi candle is there off earnings for sure. And I would want to wait to see what that's going to do on Monday. CPG, another good one. So again, you can see this is really a choppy stock. Probably not one I'd trade, but see how nicely this Heikin-Ashi cut this drop right here. And we're getting another one right here. And here's the regular chart. This counterpoint energy, again, crescent point energy, another oil stock. Oil's been very, very weak lately. I mean, if we take a quick look at USO, you can see what oil's been chopping all over the place, and now it's coming down again off the 100-day moving average. All right, and just 2 more to do, and then I'll show you the American Express. Whoops. Charter. I'm looking for this charter. Again, earnings yesterday. Here's the Heikin-Ashi candle off of earnings. So that's what a Heikin-Ashi candle looks like after earnings. You get these gaps and it move down, then you want to take a look at your regular chart. It's probably something you want to wait and see before you take the next day. See if the downtrend continues. Is there any resistance in the area? The resistance is likely way down here. Support, I mean, sorry. And one last one, AM, another gold stock here. Very, very choppy. I mean, chopping all over the place. This trades overseas, so you get a lot of chop. But Heikin-Ashi gives you a nice, clear sign of a Heikin-Ashi reversal here yesterday, just like we got one here. And again, here's a bullish one right there. So let me look American Express for you, and then I'm going to switch over to this American Express. We just took this yesterday. The reason I took it, if I look at my regular ones, see this horizontal line right there? All right, that's a double top right there. Top, stock broke through it. All right, and if I look at Heikin-Ashi, do I have a good Heikin-Ashi candle? I do. I've got a Heikin-Ashi reversal right here off of this little wick and tail with a Heikin-Ashi reversal yesterday off of that. All right, so let me go back to let me switch to the compass system briefly here, because I want to show you AXP on that one as well. Okay, all right, so this is the compass system. This is what I use from doing my my trading during the day. I don't actually trade off of this. I trade off of Tradier. That's another good point, by the way. If you use the compass system to look for institutional trading, you don't have to trade through Thinkorswim. I trade through Tradier through a front end called TradeHawk because the commissions are so cheap. But obviously I use Thinkorswim for my compass information. Then when I find a trade I want, I just trade in it through Tradier. And I have some scans up here that you get with that. You get the scanners as well. There's quite a few scanners that we have access to. But anyway, I just wanted to talk about American Express. Now this is I knew I liked it on the daily chart. So I was looking for an entry on the 5-minute chart. Where do I want to take this on the 5-minute chart? So let me make sure I get Heikin-Ashi candles up here. I do. Okay. So these are Heikin-Ashi candles. So you see how this 15 EMA right here, how it was popping up and down above and below it. And you see this candle right here, Heikin-Ashi reversal to this side. This is where I took the trade right here. Now it's a swing trade, so I wasn't too much worried about for the 5-minute chart. I was just waiting to find a decent entry. So I found an entry here. We got a little bit of chop here, and then we started getting Heikin-Ashi candles, flat bottoms all the way up, all the way up, all the way up. So that was how I used it to find my entry. But I was going to be long this on a daily chart, which means I'm taking this as a swing trade, and you can see how it's breaking out here, as I showed you in the compass system, in the TC2000. But notice everything is green across the board on this candle. This was the multi-time frame momentum right here that had gone bearish, bullish, bearish, bullish, bearish, boom, green, bullish, very bullish here. All right, so that's what I was looking for, and that's one of the current trades we're in. All right, let me just answer a couple questions. I'm going to go back to the slides. Check, where do I put a stop? Well, my stop is going to be based on a technical level. If I'm in a trade and I like it long, if I look at AXP, for example, and let me show up TC2000, because I'm going to figure my stock out from TC2000 a lot easier. All right, so here's American Express, and I go to a regular candlestick. Where's my stop? See this line right here? Closes back below that line, I'm out, because it's going to be a failed breakout if it closes below that line. So 204.77 would be a stop on that. That's how my stops are all based on technicals. Robert, what made you interested in using TC2000 for charting? I've been using TC2000 for charting before I turned to a full-time trader. I came across it a long time ago. It's by Warden Brothers. I believe it's the best charting program out there. It has the best scanning you do. I've got so many scans that I run in TC2000. I have scans in Thinkorswim, but the TC2000 scans are unmatched as far as I'm concerned. What broker do I use again, Milton? I use a broker called Tradier. Now, Tradier, you can't trade futures or a forex on there, but you can just trade typically stocks and stuff. But I use them because for $50 a month, I get unlimited trades, stocks and options, no commission. I just pay $50. I pay no commission on any trades I take, and I trade a lot of options, so it's a big deal. Again, it's Tradier. Can I send you the name of the broker? TD seems expensive in commissions. Yeah, it is. It's Tradier. It's Tradier that I use. Tradier. Tradier. I'll just pop that in here for you. And I would suggest using TradeHawk as the front end. Do I use TradeHawk as my front end to Tradier? I fund my account through Tradier, but I use TradeHawk because it's much more user friendly. You can do a lot more with it. In TradeHawk, you can set up a lot of trades that you can't do in Tradier, and when TradeHawk identifies the criteria, it'll send the trade over to Tradier to trade. And Mark, did I do a vertical spread or a single call? I did a call. I did calls on Mark for that one. I want to give it some time. So I only use debit spreads typically expiring the current week. 80 EMA in the daily and 50 EMA on the minute charts. On the 5-minute chart, I use the 80 EMA and I use the 15 on the compass system. I've got the 15 up there on the compass system, but I also have the 80 EMA. I didn't want to put the 8 and the 15 on compass. It would make it too messy. I have the 8 running, 8 on the 80 and 15 on my TC2000. Doug, did I say TradeHawk? Yeah. What does TradeHawk to do? Tradier does not. A lot. You can set up all kinds of like bracket trades, OCOs, a lot of stuff that you can't do straight with Tradier. TradeHawk gives you a lot more flexibility for the trades that you structure. The average holding period, Dinesh, some of the trades are day trades. I'd say the average trade, I don't know, maybe we have some of them that'll run 2-3 weeks, but most of them are going to be over with in probably 3 or 4 days, average. All right, so there's American Express right there. So let me go back to the slideshow. Just have to bear with me a minute. When I bring this up, I want to make it full size. So let me do that. All right, so we're just going to zip through here. Don't get dizzy. All right, so okay, so now I'm going to show you some charts of recent trades we've taken with the compass system up here, and some of the ones we just do. I think Workday was one of the ones I showed you that we did an alert on. This is a daily chart here, and I want to show you why I took this. And actually, that's not where I took it. I took it over here. The arrow is messed up. But what I did was I took this trade when, so notice how we had blue here and went from bearish to bullish on the current time frame, and then right here we're chopping around. When this switched over here is where I took it, and this shaded area right here is what's called the dynamic compression zone. Dynamic compression zone is an area that the compass system produces to basically show you an area where you want to get in to the upside or to the downside. But this is where I actually get into the trade, where this turned blue and this was blue. It went back and forth again, but I was pretty confident that this was going to continue because this had turned to dark green, and I followed it up. So that we were in that trade for 5 days, 30% profit in Workday. MDT. Let me just check questions here one more time. If Doug, if you're confused about TradeHawk, just go ahead and Google it. There's all kinds of videos on what it'll do for you. I mean, I really like it. I've been using it for a good long time. Are you able to calculate the loss of the option based on the stop loss of the stock? In other words, you buy AXP for $5, for example, and the stock hits your stop loss. What percentage do you lose in the option? You can't correlate that necessarily because an option premium is made up of stock price, it's made up of volatility, and it's made up of time decay. So you have to know all those things. But I don't worry about that. If my stock hits my breakdown, if it hits my stop, it goes below my stop, and I have to get out of the trade, I'm getting out of the trade. I don't care what the option's priced at, I'm getting out. Unless it's down to 2 or 3 cents or something, then I'm not going to sell it. I'm going to wait in case I get some of a miracle bounce or something. But you can't correlate that. I can tell you if I'm looking at it, if I'm in a day trade, and let's say I've got a dollar profit target on the stock, I can look at the stock price right then and know how much I need for that price to get me to my take profit target. I can tell you the stock's got to go up 45 cents and we'll be able to get out. But you can't do that on a stop because you don't know how much time is still left on it, how much time decay is in there, how much volatility is still in there. I also provide the exit alerts. No, you don't. Well, you decide if you want, but all my trades will come with the entry and you'll get an exit. When I exit the trade, you'll get the exit. You know, if we get a bad news and the options go to 0, it's going to expire worthless. You don't even need to know about that. But I do give you an exit on every trade. What's the difference between what TradeHawk does and what Thinkorswim does? Not an awful lot. Thinkorswim is pretty flexible. The problem is the difference between Thinkorswim and using Tradier and TradeHawk is the commissions. It's cheaper on TradeHawk using Tradier than Thinkorswim is. If you can get Thinkorswim down to a nickel a contract or so, that's probably not too bad. But you know, if they're charging you 25 cents a contract on an option trade, and let's say you do a spread, that's 4 legs, 2 in, 2 out. That's 4 legs. That's $1 per contract on each one. All right. So if you're doing 10 of those, that's $10. Those can add up pretty fast. That's the only difference. Thinkorswim is a good trading platform for options. It's probably one of the best. And there's the other trade, the other one that's I actually traded. I can't remember the name of it, but Tom Sosnoff did that one as well. But it's the commissions. That's the difference. Do you need 25,000 account to trade options? No. You need 25,000 if you're going to do a day trader. To be a day trader means you can only do if you're going to be a day trader you can't do day trading. You can only do 3 round trip trades a day in a week. In other words, if you get in the day and out the same day, that's a day trade. You can only do 3 of those in a 5-day period if you don't have at least $25,000 in account, or you can have a cash account. You can do it if you have a cash account. But typically, if you're going to be day trading a lot, you need to have at least 30,000 in your account. Okay, so let's go back here and just kind of cover this. I want to kind of wrap up this so I can show you exactly what the offer is. We want to make sure I get to show you that. This was MDT, and again, I want you to see the compass system. How here, see here, this is where we get in here. This is a daily chart. I get in here right off the 15 when this went blue. Right here, when you have everything's green and blue, the institutions are in MDT. I get in, and it made a beautiful move here, by the way. 25% on the swing trade. VKTX, we took 3-day profit in 3 days in this. Again, you see it's green across the board here, and I get in right here in this gap up, and get in right here and get out right here. 30%, that little bitty move right there. McDonald's, this was an overnight trade right here. We get in for 8.30, out for 11.30, $3 profit per contract, 37% gain overnight. And you see the break here, you see everything's green. You see the break above the dynamic compression zone right here. This is where we took the trade. We could have probably actually taken it here, but I don't think I saw it until the next day. Then we just took it overnight, put our profit target in, made 37%, and we're out. Moderna, 33% profit to the downside. You can see the break here below this dynamic compression zone, the shaded area. And we get in right here, and we rode this down. This pink line, this is the VWAP. I do not use this on the daily chart. Compass puts it on there, Toss puts it on there, but I don't use it on the daily, only on the 5-minute. So this was a breakdown here, and we took 33% in this Moderna. And again, see how everything went green. See how yellow here. This was a bearish setup. Institutions were selling. Institutions are buying. Amazon took a 32% profit. This we just traded during the day. Grabbed it right here off of this breakout of compression and took that. And this was JD, 61% profit to the downside. I see it coming out of dynamic compression right here, the shaded area. We took it right here. This went to green to yellow, took the trade here, gap down. We took 61% in JD. So yeah, I think you're getting the idea. You can see what we're doing here. Again, this was a breakdown in Dollar Tree. See the big move here, 25% profit. We just took this and we took it overnight, made 25% profit. I mean, you can see that the selling is massive here. Institutions are selling the heck out of Dollar Tree, but it doesn't necessarily mean the price is going to go down. That's why you want to wait until you get a breakout of dynamic compression, which this actually would have been a nice entry right here. And then it compressed again, and then this was a really nice entry right here. Datadog, tech stock here, again, coming out of dynamic compression, breaking down out of dynamic compression. We took it right here as it broke below. Everything was yellow or red, 21% profit. Crowd, this was a nice 20% profit. Had earnings right here. We had green and blue across the board on this, took 20% profit. I think we actually just traded this intraday. I don't know that we stayed in this for a long time. Amazon, 32% profit in 45 minutes. Again, stock compressing, coming across the 15 EMA right there. Everything goes green except for the long-term trend, but I wasn't too worried about that because my current trend was green. Took it right here on this pop out of the box of this pop signal, coming out of compression, and rode it up. And 45 minutes, we're out with a 32% profit in options. Options are great if you know how to use them because you can leverage. ENPH, another 20% drop again, pop out of the box right here. And coming off of the 15 EMA to the downside, everything red. The institutions are selling the heck out of this thing. But again, just because they're selling doesn't mean that the price is going to go down dramatically. They sell, but there's retail traders buying it. But they're timing they're selling here. But there was a lot of selling going on. This was a beautiful trade we had in Verizon. I talk about this in each webinar. This was a 5-minute chart. Here's the VWAP. Remember I said you don't go short until it's below the VWAP. It's compressing along the VWAP. We get a pop out of the box signal right here, this pink arrow, coming off of this 15 EMA, which is sloping down. The institutions are all selling Verizon right here, all selling the heck out of it. Verizon is a nice one because it doesn't move a lot. It moves pennies, but the options are really cheap. We get into this with an in-the-money option, which I, by the way, always take in-the-money calls or puts. We get in here for 45 cents. We stayed in this for 1 hour, and we got 67 cents when we logged out. 50% profit when we took profits in that thing in an hour. It was down over here, but that's 50% in an hour is pretty great. And you know, if you're only putting $45, if it's $45 a contract, you buy 10 contracts. You're in at $450, you're out at $670. That's a pretty nice gain in an hour. This is a SPY trade. This is a SPY super system setup. Again, notice everything's red. See how the SPY is coming off of this 15 EMA right here, and you get a pop out of the box signal right here. This is where you would take it short as it's coming off this 15 EMA, everything red. You write it down, and you can't stay in these things that long. You know, it reverses pretty quick right down here. But we took this trade, and it was a nice super system trade in the room. We took it in the room. Netflix 20% profit. Another nice trade here, coming off of the VWAP. Notice the VWAP, pink VWAP, the 15 EMA sloping down. You get a pop out of the box single. Could have taken it here. We took it here, and 20% profit in this from here down to here. Just ride the chop down. Institutions selling the heck out of it. Tesla, this was a nice 30% profit. We took this late in the day. This was around 2:30. Stock kind of moving sideways, compressing. Pop out of the box symbol. Took it right here, rode it down, and then this is the end of the day. It moved down pretty hard toward the end of the day, and so we took 30% profit in Tesla. This is what we did at another time in Tesla. This was a daily chart. I'm sorry, 5-minute chart, and this was at the end of the day. And we had a pop out of the box signal. Everything was yellow and red. So we took this overnight. We took it overnight, and we fortunately get a nice gap down the next morning from 120 down to 112. The puts exploded. We stayed into this thing. I think we made $7 a contract on the options. That's massive gain on the options. And this was again, there's a Tesla. Again, that's the Heikin-Ashi reversal setup. And this I just wanted to show. This is an example of how I use the daily chart and the 5-minute chart together. This was a daily chart on QSR. See how it had everything went green and blue here. It had a nice gap up, so I knew it was bullish. So then I'm looking on the 5-minute chart to find where do I want to take the entry in here. So I'm watching and watching. Again, patience is really important. I'm watching this compression. I see we go to blue and green. I'm waiting for a pop out of the box single. I get one right here, and I take the QSR 5-minute chart and I ride it up right here to this reverse right here. I was probably watching Heikin-Ashi candles on the chart when I was doing this. All right, so that's QSR. All right, now this is just a little blurb. We had 29 wins in a row. Actually, the highest I've ever done is 43 wins in a row, and the most losses in a row is 4. So that's a pretty good record. I'm proud of. So again, here's the strategies we use in the room and for the alert service. So if you become a member of the room, you're going to hear a lot about this. I talk in the room all the time, all day long. I show in charts. I trade in there from about 9:15. I log in. I talk to the members. Then we start trading at 9:30, and I'm there till 4 o'clock every day. And I'm answering questions. People are saying, "How about this trade? How about that trade?" I bring up the charts on Compass. I bring up the charts on TC2000. We do a lot of education in there. You also have access to a Discord room where we've got 2 additional professional traders that you can talk to. They have an audio feed in there, and you also will look at the charts that they post of the high probability trades that they're looking at. All right, so there's the alert service. So the offers we've got for anybody who wants to take advantage of this this is the alert service right here. They're offering it 50% off. So you just put save 50 if you log in. By the way, in the chat box, all of the links should be in there. Let me look. I don't see the links in the chat box. I don't see the links. Brock, if you're there, I don't know. I don't see any links in the chat box. You're probably going to have to, yeah, I don't see any links. Let me go through this and then we'll talk about that. I don't know why the links aren't in there. Oh, there they are. They're in there now. Okay, so the links are in the chat box. If you hit the chat box, you're going to see the links to the three offers that we're talking about here. All right, so the alert service is a offering it 50% off for a year. You know, you can do quarterly for $296. The year's a good deal. I don't like to offer stuff monthly. They do sometimes, but I think a month's not enough to really test it out. You're also going to get access to my room for a month if you take the alert service. You also get access to the Discord chat. You'll get all my alerts, of course. And then I have my video library, about 25 of 30-minute videos on finding high probability trade setups, the compass indicators, how to use them, Heikin-Ashi candles, the funnels method that we use, a thing called Top Gun, which tells you how to drill down in technical analysis to get the best of the best. That's the videos that you have access to. So that's the alert service, 50% off. This is the trading room itself. You want to get the trading room. Obviously, if you get the trading room, you get the alert service. That again, use save 50. That's 50% off on that. That's $849 for a whole year. Monthly, if you want to do it, $1.48. Like I said, I don't think a month. You know, you can do that, but monthly is, to me, is you're not getting enough. You're not getting enough exposure. And again, the same thing with the Discord room and the alerts and the wise way to trade options. And this is the Compass system. If you want the actual Compass software and have it installed on your Thinkorswim platform, which you don't have to buy the Thinkorswim platform. If you have a Thinkorswim platform, you can put it on your computer. You don't have to use it. And Sergio at the Right Line office will install that on your computer for free. They support it. It'll look exactly like mine does. You'll have the same indicators. You'll have the same scans. You'll have the same everything that I've got. And again, save 50% if you go into that. Use the save 50%. Save 500 on that. And this one here is save 50%, save 50, save 50%, save 200. You're going to use 50% off for all the annuals on all of these. So there's the alert service, there's the trading room, there's the Compass system. All right, so let me see if we've got any other questions here. To follow your system, would you say it's best to get TC2000, Thinkorswim, and Trader TradeHawk? Well, if you're going to get the Compass system, you need Thinkorswim or Ninja. It'll run on Ninja or Thinkorswim. For scanning, I think TC2000 is the best scanner out there. I use all of those. I use Thinkorswim, but I'm not paying for it. I just put the Compass system on there. I use Trader and TradeHawk for my actual trading. That's where I actually enter in my trades. That's where all my trades go through. But Thinkorswim with the Compass is telling me what the institutions are doing, and TC2000 I use for drilling down to get much more into detailed technical analysis. The links are in the chat room now. If you just go to the chat, you'll see the links in there for the three things: the Compass trading system, the live trading room, and the text alert. Those are the three things we just talked about. You've also got the number there, 786-732-4656 for calling to get some questions answered. Do you need to be in the room, or you just send us the text alerts? No, you don't need to be in the room. That's the whole point of the text alerts, Dinesh, is that the text alerts are for people who basically either don't want to or can't watch the trade market during the day. So if you're working or you're sitting at home or whatever you're doing, when I send a text alert out, inside of a minute or two, it's going to show up on your phone. You don't have to be in the room. If you're in the room, you're going to get them too. If I was showing entries based on regular candles, but where you trade entries based on 5-minute HA candles, yeah, my entries are going to be based on 5-minute HA candles. If I'm going to take a stock long, I want the daily chart to be bullish. One of the things I look at is a Heikin-Ashi reversal on the daily chart to enter what may be a good entry point for entering the trade. But for intraday trades, when I'm trading or trying to find an entry, even for a swing, I'll wait for the stock to set up on the 5-minute, and then I use the Heikin-Ashi reversal to look for a bounce off of a support level. Do you ever offer a lifetime service? You can call and talk to Right Line about that. I don't know. They may do that. If you want to do a lifetime, I guess you can if you want to. You just call them and ask them. Again, call 786-732-4656. I just put your name and the question in the question box here, and they'll pick that up. Please confirm, how many alerts can we expect per week, day with your service? Dinesh, there's no easy answer to that. How many trades am I going to take? It's based on how many high probability trades I get. You're probably never going to see more than 2 trades a day on the alert service. Really, you may see 3 once in a while. A lot of times you're not going to see any. I would say that the average is probably going to be, around 4 or 5 a week. But it just depends. I mean, I have no ability to tell you right now how many high probability trade setups there's going to be on Monday. When they're there, they're there. That's when I take them. Yeah, Jerry, give them a call and ask them about that. Rick, you're welcome. Do they take PayPal? You'd have to ask them. I don't really get involved in that part of that. I'm basically, if in case you couldn't tell, I'm not a professional presenter. I'm a professional trader, and I just do my best to try to share my experience and my strategies with folks and show what tools I use to do that. Do you have any experience with Right Line Trading AI Lab? That's the auto trader. I not a lot. No, I'm pretty much, listen, I'm in the room 5 days a week from open to close. I don't really have a lot of time to do anything except scan for trades, answer questions, and do education to everybody in the room. That's where I spend most of my time. Jerry, thanks much. I appreciate that. Robert, you'll be back. Appreciate it. So again, if you have any more questions, just drop your name and number in the question box. Phone number, just your phone number if you want them to contact you. Because you've got some questions here that I can't answer, but Right Line would be able to, and they'll get back to you, and they'll be swamped with for a while. Probably be Monday or Tuesday before you get back to you, most likely. But yeah, they might get back to you today. But I appreciate everybody coming to the webinar today. We were on here quite a long time, an hour and a half, which is a little bit longer than I thought you probably wanted to be. But I appreciate everybody's questions. I hope what I went over with the Heikin-Ashi candles was helpful to everybody as far as improving their trading. So thanks very much. I appreciate